Is this just a bad market day, or something way darker? The S&P 500's nosedive has everyone on edge, asking, how low can this thing go? I'm Alfred Mugo, and after years battling the wild swings of Forex trading, where one slip could erase everything, I've learned to spot the difference between a hiccup and a full-on financial earthquake. This isn't just another recession scare. It's bigger, messier, and a whole lot scarier. Hold your cash. That's a gut instinct I've sharpened over countless currency wars, where timing isn't just strategy, it's survival. Let's peel back the panic and figure out what's really driving this mess, from tariff jitters to global trade shakes. There are warning signs everywhere, and ignoring them could mean financial devastation. Oh, and quick heads up, this isn't my real voice, just the one bringing you the message. Stay locked in, because what's coming could sharpen your edge, whether you're a Forex warrior or just trying to keep your money safe. Picture an old marketplace buzzing with traders, coins clinking, deals flying. Then, boom, the coins they're trading? Worthless. People freak out. Some stash what's left. Others scramble to swap anything they've got. That's not some dusty history lesson. It's what happens when money itself starts to lose its meaning. Way back when, these shocks flipped entire economies upside down, leaving folks stunned and broke. Today, as the S&P 500 trips into correction territory, it's like hearing those same old echoes. This isn't a random dip. It's a sign that the ground under our financial world might be shifting again. Recessions? You can see those coming, like a storm on the radar. But this? It's an earthquake, sudden, brutal, and blindsiding. How much lower can it drop? That depends on whether we've learned to brace ourselves, or if we're still playing by old rules that don't work anymore. Picture an old marketplace buzzing with traders, coins clinking, deals flying. Then, boom, the coins they're trading? Worthless. People freak out. Some stash what's left. Others scramble to swap anything they've got. That's not some dusty history lesson. It's what happens when money itself starts to lose its meaning. Way back when, these shocks flipped entire economies upside down, leaving folks stunned and broke. Today, as the S&P 500 trips into correction territory, it's like hearing those same old echoes. This isn't a random dip. It's a sign that the ground under our financial world might be shifting again. Recessions? You can see those coming, like a storm on the radar. But this? It's an earthquake, sudden, brutal, and blindsiding. How much lower can it drop? That depends on whether we've learned to brace ourselves, or if we're still playing by old rules that don't work anymore. Now, think of the economy like a big, beating heart. Debt's the blood keeping it going, great when it's flowing smooth, deadly when it clogs up. Borrowing can spark growth, keep things humming. But stack too much debt, and it's like the arteries stiffen. Cash and trust just stop moving. Right now, with the S&P 500 wobbling, that heartbeat's getting shaky. Our economy's been running on borrowed money, like a credit card we've maxed out for years. The bill's due, and markets aren't just twitchy about tariffs or trade wars. They're waking up to the fact we might not have enough real cash to keep this party alive. A recession slows things down, sure, but a debt trap like this? It could flatline us, pulling the S&P 500 way deeper than anyone's comfortable with. How low? Imagine a heart attack waiting to happen. If we don't clear the junk, it's game over. Let's break it down like waves on a beach. Short-term debt cycles are those little choppy ones, annoying, but you can tough them out. They hit the S&P 500 with quick jolts, and pros just ride it. Then there are the long-term cycles, huge waves building way out at sea, quiet until they crash and reshape everything. This correction we're seeing, it might be the first splash of something massive. Those short waves might wet your feet, but these big tides, they can wipe out your whole setup. The S&P 500 slide could be a heads up that decades of borrowing, stuff we figured would never pay back, are finally catching up. How much lower can it sink? If this is the start of a monster wave, we're talking depths we haven't even pictured yet. Look at the S&P 500 like a runner who's been sprinting hard, legs shaky, lungs burning. 4 years, it's been tearing ahead on cheap cash and big hype, smashing records left and right. Now, it's stumbling into correction territory, and it's not just tired, it's running a fever. Stocks aren't just dipping. They are sweating bullets, gasping like they're not sure what's fueling them anymore. This isn't some cool down or normal profit grab. It's the market whispering, hey, what's money even worth now? A recession might tire that run out, but this fever's a sign of something nastier brewing inside. How far could it fall? If it's just a chill, maybe it bounces back quickly. But if this breaks into a collapse, we're in for a long, ugly run downhill. Now imagine the stock market and the economy dancing together, but they are totally out of step. The S&P 500 spinning fast, all flashy moves and future dreams, while the economy's dragging its feet, weighed down by jobs and bills. They are supposed to move together, but one's guessing tomorrow, the other's stuck in today. This correction? It's like the market tripped, hinting the music's turning grim. In a recession, they both slow down, no biggie. But hey, the market's seeing trouble the economy hasn't felt yet, like fever dreams kicking in before the crash. How low can it go? If the economy stumbles too, this dance could turn into a faceplant, way worse than a regular downturn. Here's where it gets real. Picture market in chaos. Stalls flipped, people running scared. Most bolt with what they've got, but the smart ones, they stick around, digging through the mess for gold others miss. That's this S&P 500 correction, a storm that spooks the weak but pays the bold. It's not about hiding. It's about grabbing the tough stuff, the assets that hold up when everything else cracks. Panic screams, sell, but opportunity's out there shopping. A recession's just a waiting game. This is a battlefield where you can win big or lose it all. Think of the economy as a big stage, with politicians pulling strings backstage. Tariffs, taxes, rate cuts, they're not boring numbers. They're levers that can tip everything. Right now, as the S&P 500 shakes, those policy puppeteers are spinning the wheel like it's roulette. Tariffs here, cuts there. But this isn't 2008. More debt won't fix a debt mess. Every fix feels like tossing gas on a fire, and the S&P 500's calling their bluff. How low's the cliffhanger we're all stuck watching? Stay quick on your feet, because this game's changing fast. Your money's a castle, and this correction's the army at the gates. When the S&P 500 falters, panic's banging hard. Diversification's your defense. The moat, the walls, the backup plan. Stocks alone won't cut it. Mixing gold, crypto, land. Stuff that stands tall when the rest crumbles. Cash isn't king here. It's your oxygen mask. Grab it first, then build smart. How low can it go? Who knows? But a castle with all kinds of treasure inside doesn't just survive. It comes out stronger. This isn't me crying doom. It's me handing you the map. The S&P 500 correction's not the end. It's the first rumble of something big. Are you the deer freezing up, or the one cashing in on the chaos? Hit that like if you're staying sharp. Drop holding in the comments if you're ready to play it smart. I'm Alfred Mugo. We don't just guess at storms. We build arcs. Let's get to work.